back, let's connect with Santosh Rao. He's head of research and partner at Manhattan Venture Partners. Good to have you on board. Looking at what we're seeing with respect to the rout owing the hot inflation data, how worried would you be, and what are you reading into the comments with respect to what has been mentioned in terms of the future rate hikes that we can expect and the trending of bond yields?
Yes, good morning. Thanks for having me. Market knew that the interest rates are going to go up. We knew that there were going to be hikes. I think what happened was this read today really spooked the market. The inflation data was much stronger than what we thought. And so I think that's what really spooked the market. So that might really it has brought about the narrative that we may have to raise rates faster. So there might be a 50 basis point increase instead of 25. So that's where the market is trying to come to grips with. Is it that bad already? Like James Bullard said that, maybe we should do a 50 basis point and get to 100 by July. So all these things are very frightening, might be too fast, too soon. So I think that's what spooked the market. So at this point, well, it's expected. Inflation is expected. We know it's hot. But we just have to see how the Fed sees that and whether it will come down hard and aggressive. And because they have a balancing act to do, they can't really slam the brakes on the expansion on one hand, but they need to control inflation. So they have a job on their hands. So let's see where it plays out. And that's what the market is confused about. And that's going to be the name of the game throughout the year. It's volatility and rotation throughout the year. And we're seeing that.
Right. And what does that mean for flows? Can you just tell us that the point that you were making that, that led to the sell-off? You think that is also a determinant where people just go to safety and whatever is the price, they just sit on a lot of cash before such big events, even if they may have a limited impact over the long run?
Yeah, I think the smart money is already moved out of high growth, secular growth stocks and into the value stocks. A lot of cash on hand now. A lot of money has been pulled out already. So I think you're going to see that quite a bit. We don't know yet. I mean, there was a feeling initially, even 2 days back, that maybe tech can survive this and maybe inflation won't be that bad. And good techs, I mean, like techs that have no debt and good pricing power will continue to do well, which is the major mega techs and also the good techs in the cloud and the secular growth areas. There was a feeling that they would do well. But at this point, looks like everything is getting hit badly. So we'll have to wait and see in the next 3 days just to see where the dust settles and is everything being thrown out unwarrantedly. So let's see. So net, to answer your question, yes, there's a lot of that going on. People are cautious. They're pulling money out. They want to be on the safe side.
In terms of emerging markets, what does that mean? You think that emerging markets outflows that we've been seeing, except China, will tend to continue in the near term, irrespective of the yield move, or with the yield going to 2%, you expect that to accelerate?
Yeah, I think that move will continue because the interest rates are going to go up here. The real rates are going up. So I think things are much better outside. So I think that will definitely have an impact. A higher dollar will have an impact on emerging markets. So all that stuff will play. It's negative. So that's the whole thing. Inflation is very corrosive. It has too many ramifications across the board. So we want that controlled, not only here, but in other countries. So it has a very impact. So I think you will see some money flowing out, but I think a better idea will come in March, when Chairman Powell will lay the groundwork, or at least give us an idea as to what he wants to do down the road. Is he going to be as aggressive as what the market thinks he might be, or will he be steady and data-driven like he has said in the past? So I think that's the thing. There's a big narrative out there that inflation will come down. The supply bottlenecks are coming down. So inflation might temper a little bit. So things might get back to normal. But there is still a lot of people unemployment, a lot of high openings. I think about close to 9 million job openings, 6 million still unemployed. So there's all that mismatch going on. So all that needs to be corrected. The structural issues need to be corrected. So we'll wait and see. A lot of moving parts, a lot of cross currents. I think March meeting will kind of give a better roadmap as to what's going to happen the rest of the year.